Good evening, traders. This is Taylor from thetradinganalyst.com. Thanks for stopping by. We're going to take a look at the S&P 500 chart right here. But first, if you're not already a member, go ahead and visit the homepage, www.thetradinganalyst.com, and start your 100% free 7-day trial today. All you need to do is enter in your name and your email address, and you're going to get instant access today. No payment information is required. Once you enter in just your name and email address, you're going to be able to take advantage of all the member-only features like the live market analysis. You also get to watch me trade live on the video and audio screen share feed. You're also going to be able to take part in the member videos as well as the nightly watch lists that we produce for members every night to help you prepare for the market day ahead with key levels and price targets, resistance levels, support levels, everything that you need as a trader. You're also going to be able to take part in the profitable trade alerts, which not only give you the opportunity to make you money in the market, but you're also going to be able to learn while you earn, because we're not just handing you out alerts, we're explaining in detail why every trade was taken so that you can learn from it, from our successes and our failures. We're learning from everything. It's a great opportunity, and we'll see you over there. All right, so let's get into these charts here. S&P 500, a pattern here that I want to point out here. We have a potential rising wedge breakdown right here, and today would be day number 1 that we broke out of that wedge. You can see it a little better on the hourly chart here. Got a touch here, almost a touch here, grind it up against it here, grind it up against it there, and then the top end of that rising wedge is right here, touch here, here, and here. So we broke out of that rising wedge today. Now looking at the resistance levels, another thing that I want to point out on the S&P 500 is we've got this potential reversal candle right here at the highs about 212.38. Right here, we weren't able to close over that. I think we closed over it by a penny, so that doesn't count in my books, especially when the next day we closed again below that. So this level, we got rejected hard on this day. This day, we weren't able to close over it, so that's still resistance. And again, we broke below it right here. So I'm expecting a little bit of consolidation on the S&P 500 to the downside. We've got a gap to fill right around 210. What is this? 210.30 or so. There's a gap right there. There's also a gap down here that may want to fill around 205.25. I don't want to get ahead of myself. There's a long ways away, and we are, in an incredible uptrend here on the market, regardless of this rising wedge pattern. It's a really short-term pattern, so not really ready to get my full-on bear suit on, but we are noting some weakness up here, so I'm expecting a little bit of a downside, and it's kind of a low risk short trade up here. I expect the gap to fill from yesterday. So if you look, you can see it a little bit better on the hourly chart here. I'm going to switch back. So the close of yesterday right here at 212.38, and that gap remained unfilled. So I expect we could see a gap up tomorrow around that 212.40 or so level, and then down from there is what I am expecting. I'm ready to be wrong. As traders, we have to react to price, and right here we're seeing the first signs of weakness here on the S&P 500. If you look at the daily chart again, we're also at these key resistance levels. Look how many times we were up here, once, twice, 3, 4, 5, 6. times up here. This is the 7th touch up here. We haven't been able to pierce this level in a while, so it should be no surprise that we might be seeing some consolidation here before potentially heading higher or lower. Moving forward, support level I see right here is 209. There are some supports in between here and 209, but 209 is just the biggest level of support that I'm seeing from the low of this candle, this candle, this candle, almost this candle, and about this candle right here. So 209, that's going to be the main support right there, and that'd be an area that I'd be definitely covering some shorts here, as I think we may get some choppiness, bounce from 209 up to 212, and then before deciding the next direction. So just kind of throwing some ideas out there. I don't have a magic 8 ball, so I don't know exactly where it's going to go, but I do know these levels. I do know the important levels, and you should too. All right, guys, thank you for stopping by. Appreciate it as always. Again, if you're not already a member, go ahead and visit the homepage and start your 100% free 7-day trial today, and enter in your name and your email address, and you're going to get instant access to all of the member-only features. It's a great opportunity. We'd love to have you.